Hi, Steve here with a special market update. The S&P has had an important move today. We're doing this as of the close on Thursday. Notice the blue lines, the two blue lines showing a resistance area from over here and over here. And the market has now closed above it. So what should happen is, based on change of polarity, old resistance becoming new support, anywhere from about the 1474 area to the highs over here, right around 1470, should become support. And notice also, one of the things that I look at is I compare two moving averages to determine the intermediate term trend. So I'll look at the 20-day moving average, simple moving average, which is this blue line, and the 50-day moving average. And notice how the moving averages are both sloping up, which is a positive, and the 20 is comfortably above the 50-day moving average. So we've been bullish on the S&P for quite a while now, and the breakout now means that the bulls have to defend their territory, and any close under 1470 on a daily basis would get me turn me from bullish to neutral, and actually under the 1460 level, viewing these days as next support. To me, this is more important, though, where the arrow is, would actually turn a short-term negative. So at a critical juncture here in the S&P, and as long as we hold anywhere from the 1474 down to, let's say, 1462, kind of as a last gasp, as support on any retracements. My next target, we'll look at the weekly chart, the monthly chart, because we're now reaching levels that we haven't seen since the highs made all the way back in the good old days of 2007, before the big collapse. And so what that would mean is my next longer term target would be up here right around 1575. Now on the Forex front, let's look at euros. And notice here we have this is called a gravestone doji, long upper shadow. It's a shooting star with a doji instead of a small wheel body. Essentially, the open, low, and close are at the lows or near the lows of the session. And coincidentally, for those who attended our session talking about our member site, mycountercharts.com, I also made reference to a gravestone doji at the highs of, I think it was GE or so. You should be getting an email if you missed that with a sample, with a copy of the video. So just check your emails for that if you're interested to see the other gravestone doji I discussed. But anyway, getting back to this. So we have gravestone doji, and whether it's a gravestone doji or regular doji, the high of the doji, and this blue line should really be up here at the highs, becomes potential resistance, and you can see how indeed the market stalled over here, and especially over here. So this resistance held up until a couple of days ago, where at the red arrow, the white candle closed above resistance, so that's a positive. And what we've had over the past couple of days is, a few days ago, is a bearish engulfing pattern, the black wrap around the white. And this is fine for a bearish engulfing pattern. There's a little bit of a nuance in Forex markets with engulfing patterns, but this is fine as a bearish engulfing pattern. So the market has to close, let's say, above 134 to, as the Japanese would say, blow away the dirt. And on that close, we would also not only close above a resistance area set by the bearish engulfing pattern, but also would break above this pattern over here. You see the rally over here and the descent over here. That's a potential bull flag. So on a close above 134, we will have confirmed a bull flag and a close above the high of the bearish engulfing pattern. But right now, just looking for a trading range essentially between 132.50 and 134. Now, on a close above 134, the next resistance is up here at this dark cloud cover, the black candle getting deeply into the white candle. For those, just a reminder, for those of you who are new to candlesticks or may have learned them elsewhere and not sure they're correct where you learned them, from the place you learned them, you could always go to our website at candlecharts.com, and we have a free glossary with the essential candlestick signals. So here we have a dark cloud cover, and that becomes potential resistance. So on a close above 134, that was a resistance area we were talking about on the daily chart. My next target would be up here, right around the 135 level. What I've shown here are some Fibonacci retracements, and we've discussed this, I think, in our prior market updates that I did a while ago, where the rally here from the low here to high had right around a 50% retracement, very normal, very healthy retracement, and the market rallied from there. So this would be the next resistance at 135, and then above that what I would do is go back to the daily chart. And one of the great things about candlesticks is you could use Western technicals, and I use them a lot because we get price targets. So based on the bull flag measurement, which goes from the low here, the flagpole, to the high here, and you add it to the breakout point, would give an upside target of 137.50 if I did the math right. Let's see, 130.50, so about 350 pips added to 134. Yeah, it would be 137.50. But once again, while 137.50 is a potential target on a close above 134, based on the bull flag, the first resistance would be up here at 135. So thanks so much for joining me, and may the candlesticks continue lighting your path to greater profits.